All right, in this explainer, we're doing a visual walkthrough of a really unique approach called the market DNA method. We're going to be looking at a specific case study, how it's applied to the S&P 500. So let's dive right in.
So, here's our game plan for today. First, we'll do a quick overview of what the market DNA method is all about. Then, we'll jump into what it calls Phase 1, breaking down the entry points, the risk analysis, and the potential targets. After that, we'll look at the entire cycle from start to finish. And finally, we'll wrap up with some really important disclaimers.
So what exactly is the market DNA method? Well, it's a proprietary system that's based on geometry. Now, for this explainer, we're not here to guess or make predictions. Our job is simply to observe and document the information that the system lays out. And it's super important to be clear about what this method is not. It doesn't use any of the traditional tools you might be familiar with, like technical indicators or fundamental analysis. Nope. We're looking at a totally different framework here. Our goal is just to document its outputs exactly as they're presented. Okay, let's get into our case study, the S&P 500 Index. According to the system's documentation, as of January 18, 2026, the market is in what's defined as Phase 1. And Phase 1 is all about entry points.
Take a look at this. Here you can see the method's geometric structure laid right over the S&P 500 chart. The most important thing to see here is that the price has just arrived at the first key level defined by the system. You can see it labeled right there as M.
So this brings us to the primary entry point. The model documents this level, M, at a very precise price, $6,872.96. Now, beside that primary entry, the system also defines a secondary optional entry point. It's labeled PC, and it's set at 6,820.14. Think of it as part of the overall risk management strategy.
Speaking of risk management, how does that fit in? Well, this next part is all about the predefined parameters. These are the specific numbers used to manage this entire documented plan. This table right here shows us the exact inputs for the risk plan. It's all based on a hypothetical capital of $100,000, with a maximum allowed drawdown of 5%. Then the system brings in its own unique parameters, a trapezoid time duration of 24 days, a third triangle domain of 2.18%, a risk coefficient of 2, and a contract size of 10 units. These are all the ingredients for the model's calculation.
The documentation is very clear on how these inputs are used, and I'm going to read this directly. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. So as you can see, this whole process is completely systematic.
So, after the system processes all of those inputs, it gives a specific output. The calculated size for each of those two potential trade entries comes out to exactly 0.83.
All right, we've covered the entries and the risk. Now let's flip to the other side of the plan. This next section is all about the predefined exit targets. These are the potential outcomes that the model projects.
So, this geometric structure actually defines three potential price targets. Target 1 is at what's called the mirror level, sitting at $6,888. Target 2, which is noted as a safe exit at Apex N, is at $6,947. And finally, Target 3, the full exit, is at the very top of the trapezoid at $7,002.
So what could this look like? Let's imagine a scenario where only that primary M entry is triggered, and it's held all the way to the T3 exit. Well, the model documents an expected profit of $1,071. That translates to a 1.07% return, which annualizes out to 16.27%.
Okay, what about the second scenario? This is the one where both the M and the peak entries are used. In this case, the expected profit is documented at $2,124. This would be an expected return of 2.12%, with an expected annualized return of 32.3%.
Okay, so we've looked at the entry, the risk, and the targets. Let's zoom out a bit and look at the entire sequence of events. This is the complete predefined path for this particular market DNA cycle.
The model lays everything out in 4 clear phases. It all starts with Phase 1, the entry that we've been talking about. Phase 2 gets triggered if the price touches the mirror delay line. Phase 3 happens when the price reaches Apex N, and the cycle is considered complete in Phase 4, once the price hits the top of the trapezoid. Before we wrap this up, it is really important that we cover the purpose of this documentation and go over some key disclaimers. This is the important stuff. Okay, it is absolutely crucial to understand these points. First, this is not financial advice. Second, the model's rules strictly prohibit using leverage above 10. You should never, ever invest essential personal funds. This analysis is purely for public documentation and verification purposes. And finally, any risk management has to follow the specific user's instructions.
So we'll leave you with a question to think about. How is documenting a predefined systematic approach like this one any different from just making a subjective prediction about the market? It's a really interesting line to think about, the difference between following a process and trying to predict the future.
And that wraps up our visual walkthrough of the market DNA method as applied to the S&P 500. If you'd like to see more documented case studies like this one, you can always visit the website. Thanks so much for watching.